Welcome back to the Banking on Digital Growth podcast. I'm your host, Derik Kraus, and today I am joined by Bill Bloom with Diane Money. And I'm going to spend a little bit more time on the intro today than I usually do because I want to share a personal story that relates to the conversation that I had with Bill and why this matters for a credit union or a bank. And it comes down to measurement and analytics. And it's a true principle in life that if you want to make an improvement in some aspect of life, this could be personal, it could be something in business. If you can have clear measurements, then those clear measurements are going to help you understand where you are today and what you need to do to change, and then to find out if the actions you took actually made an impact. So my personal story is a year and a half ago, I was applying for some insurance and I had a medical examiner come to my house, and part of that was a blood draw, and they drew my blood, they analyzed it, they shared the results with me, and everything looked good except some of my cholesterol ratios were high. Not super high, but elevated, and that caused the insurance company to, instead of giving me the preferred plus tier, that knocked me down into the preferred tier. And it got me thinking about my eating and how I probably am consuming too much saturated fat because in a past life, I once ran a bacon jerky company, which is some indication that I like things like bacon and ice cream, and all the delicious things that any normal person would like to eat. And I was eating too much saturated fat, and that was causing me to have elevated cholesterol levels. And so that exam, those clear analytics helped me to see that. And over the last year and a half, I haven't been perfect. I still like a bowl of ice cream now and then, but I can tell you that I have been more thoughtful and more conscious about having less saturated fat in my diet. A lot of times it's little things like when I'm having a baked potato, I put olive oil on the baked potato instead of butter, which is not as delicious, but it's something that I can live with, right? And then just a couple weeks ago, my wife and I were we've been applying for some new insurance, and we had to do medical exams again. So we had a medical examiner come to our house again, draw both of our blood, send it off for analysis, and I was anxious to see what my cholesterol scores would be. I honestly, I wasn't expecting them to be better. I was just hoping that they wouldn't be worse. And we got the results back. I looked at that, and to my delight, I saw that my imperfect efforts had made an impact, and now all of my cholesterol scores are in the green, and I'm good on that front. And that's just a testament to me of the importance of having clear measurement and clear analytics. Now, the thing that stood out on my blood report is that my resting glucose level was a bit elevated. And I know why. It's because I've been eating too many late night carb snacks. And so that's the next thing I need to fix in my life. But those clear measurements and clear analytics are the thing that are helping me to know what I need to fix and what I need to improve. Now, when I think about that, my mind instantly goes to the work that I've done with financial institutions for the last 11 years with websites, where that is the key insight that caused us to rebrand our company from initially being called Bloom CU to Metrify. Is this focus on metrics and measurement, and that makes all the difference for whether a financial institution is able to use their website to achieve growth and get more loans and deposits through it, or they don't. And most financial institutions have no idea if their website's helping them grow or not. And that usually means it's not actually helping them. But the way this all relates to the podcast conversation that you're about to watch or listen to is that Bill Bloom with Diane Money is taking that same principle and applying it to measuring how consumers, how people are spending their money. And we talk about how in his experience as a financial planner, he sees that most people fall into one of two buckets. They're either savers or spenders. And in particular, for those that are spenders, these are people that need help to learn how to, or just have accountability for, or have the assistance and support to help them save more money. And it starts with measurement. It starts with clear analytics on how they're spending money. And this is a topic that's very important for me personally in thinking about my financial life, being much more clear on how I'm spending money has made a huge impact personally and in my business. And so I feel like what Bill has to share in this conversation is very important in helping people, but also is a means that financial institutions can grow deposits, which I know is a concern that all financial institutions have, is growing deposits. So I want you to go into this conversation listening for how measurement and analytics play a key role in being able to see the truth, understanding what's actually happening in a business or in a personal life, and how that is critical for making a change, and then again measuring the impact of that change. So really excited to share this episode with you today. Enjoy. Let's dive in. Hey Bill, welcome to the show.
Derik, so happy to be here today.
Yeah, let's talk about Diane Money. Let's talk about saving money. And so the way that this conversation came about is, I think you were talking to J.R. Lay, right? And he
Oh,
said,
yes.
he said, "Hey, go chat with Derik about being on the show."
That was verbatim. We just brought you up. I mean, we were talking about that California trip and how we all met each other and with your business partner, too. It's like,
Yeah.
dude, you need to be on his show because you know, JR uses the word dude as much as he possibly can. Must be a Texas thing. But yeah, so I reached out and here we are today.
Cool. Yeah, and if I'm totally honest, Bill, when he first reached out, I'm like, "Oh, Bill, sweet, Diane Money." Uh, but I don't know how that like relates to the Banking on Digital Growth podcast. I don't know how that relates to our audience. But then I was like, but let's get on a call. Let's chat initially and see if it makes sense. And we were talking, and he told me a little bit about it. And I want you, for the sake of everyone listening, to give a little overview and what you're working on. But the thing that really stood out to me that it would have never occurred to me until you said it, is that what you're doing can help the members of credit unions or the customers of banks to become better savers. And by being better savers, that means they have more money in their savings accounts, in their bank accounts, and therefore that means the financial institution has more deposits. It can be a means of deposit growth. And that really stood out to me because with all the work that we do with financial institutions, at the end of the day, it's about helping them grow their deposits, grow their loans. And I know from a decade of working with them that most of them don't have a lot of struggle in growing loans and in loaning out money. but the bigger struggle is in how do you grow deposits. And so
Yeah.
that part really stood out to me. And like we were talking about, uh, I want to talk about the bigger picture as well. Like how does that fit into more of the overall strategy for a financial institution? But before we dig into all of that, why don't you tell everyone just a little bit about what Diane Money is to set the table?
Yeah. Well, Diane Money was originally made for the consumer, just for everyday folks. And when I was telling JR about how the technology works and I showed him, he's like, dude, you should be working with banks and credit unions because they're having so many issues and you guys have such a great relationship. And that's where the whole ideation came from, to start collaborating with these institutions. So that was not my idea. That was JR's. He's like, people need this because they're struggling to get deposits, they're struggling to get loans. And going back, way back into my childhood, my parents had 45 credit cards. And I remember coming home from
Jeez.
college one year. Yep, I shredded them. They're on my Instagram. You should see that. It was like one of the most liberating feelings on the planet, like shredding all 45 of those. But
Yeah.
my mom handed me like this little sachet. It looked like it could hold jewelry or something. And it was like solid. I'm like, Mom, what is this? I was probably 20, 21 at the time. She goes, these are my credit cards. Hide them from me.
Oh man.
And I'm not living with my parents at that time. I'm in West Virginia. I'm out in God's country, playing soccer and having fun and all that kind of good stuff. And it didn't dawn on me until I started my financial career right outside of college. And I actually spent time to go through these things with her. Is that every store card you could imagine, the J.C. Penney's, the Eddie Bauer's, like if she could sign up for it, she would. Like spending
Mm,
was her drug of choice, per se. We all have things that we do in our lives that become either obsessions or just habits. And hers was spending money. And my parents were
yeah.
terrible with money. And that's why I've really dedicated my career to helping figure out the little things, because the little things lead to huge things and
Yeah.
much larger opportunities.
Is that what initially inspired you to go into what you're doing?
100%. I selfishly wanted to figure out how money works.
Mm,
And I thought I could do this by getting in the money game, because money is a game. It's truly a game. When you look at it from a big picture standpoint, you can have fun with it, or it could be the bane of your existence.
mm,
And when I started my financial advisory career right outside of college, I realized that so many people have either saved all their money in 401k and didn't spend any of it and they lived very thrifty, or people were terrible with their money and spent everything and had no savings. So there's like polar opposites.
yeah.
Very few and very seldom times, Derek, where people right in the middle, where they still saved but they still spent because they didn't have the means to do so. You're in one of two
Mm,
camps. And I built the Retire As You Desire brand is to help people allow their money to last till at least age 100, if we're able to give them longevity. And then Diane Money is for the other folks, for the folks who they need help from the day-to-day standpoint, whether it's a bank, a credit union, or you could use it yourself. We're here to help. And it all comes down to your spending. And I'm sure we're going to talk about that later on in the show.
okay, so you've got the two camps. You've got the savers and the spenders. Is that a
Yep.
good way to? And
SS,
so
yes. Saver spenders. Yep.
yeah, and it seems like um, in a lot of relationships, like with between my wife and I'm not. This isn't me throwing my wife under the bus. She's great. She's a responsible person. She's more of a spender. I'm more of a saver,
Mhm.
right? And I see that with my mom and dad. My dad's a spender. My mom's a saver, and um, it seems like it that's not always true. Sometimes you can get two people together that are both spenders or both
Oh, yeah.
savers, and but it seems like a lot of times that there are you get both, and that probably helps to balance it. But I digress a little bit. My point was you've got spenders and savers, and as I'm understanding, you're saying Diane Money is to help the spenders to be better at saving.
Totally.
Okay.
1,000,000%. one of the coolest things, like, let me tell you a story. When I was working with the bank in Texas, I went personally and did one-on-one sessions with 10 of their team members. And all 10 of these team members, they raised their hand and said, I want to be part of this pilot program because I'm not really great with my money.
Mm.
And I remember being here in Chicago with the two CEOs. They have co-CEOs.
These were
And
employees of the credit union that said
yeah,
they
they
want to be
were
part of the pilot.
their employees. They raised their hand and said, I could use help. And it goes back to talking to the co-CEOs. They said, my people are the best. They're the most innovative. They are so unique. They want to talk well about their employees. And then when you get down to the fact where you have the regional managers or the people who are in charge of 3 or 4 branches, they're like, oh yeah, we see Starbucks every day. They're asking for raises. They're broke by the end of their paychecks. There's a complete, that's a cultural thing, right? But I've seen this in a lot of institutions who we've spoken to, where the top brass, they're not aware of what's going on at the bottom level because they're just thinking about
Mm.
profitability. So there's
Mm-hmm.
a big discretion there. There's a big problem there. And the institutions right now that we've worked with who are getting ahead is they've solved for that. They solved for that. Okay, what's actually going on in our whole institution from the top down? But this one banker who raised his hand, he saved over $3,000 in less than 2 months by using Diane Money.
Wow. Like, what is it that? How? Like, what
Yeah.
made? Why did it make a difference for him?
Two things. It was able to show him where he was overspending every month. So
Mm.
Diane Money does that for each user individually and organically, meaning every month you're getting 3 new ways to analyze your spending, and it's going to show you where you have opportunities to save. So you don't have to do the thinking, it's done for you.
Mm-hmm.
And this banker was spending a ton of money on clothes like polos and khakis, just going into the office. And the other thing was food.
Mm-hmm.
It was
Like
just
eating
he was
out.
eating out every day. The Uber Eats, all that stuff. The Arby's coming in. I mean, it was really close to their location, so it's just
Yeah.
one of those things. And he's like, "Holy cow!" And he wrote me this beautiful email saying, "I was able to save 3 grand, 2 months. I was able to go on a friends and family trip a couple months earlier, and I didn't have to go into debt for it."
Yeah. That's awesome. So it sounds like where it starts is, and right now we're talking about, so how this, ultimately we want to talk about how this could help consumers and the members and customers of financial institutions. But you're actually starting with, well, let's first help the employees inside of those institutions to be more successful, at least as a pilot. And I think that's really important because I'm just imagining if I'm talking to a banker about trying to help me with my financial situation, and I may not know it, but their own financial life is a wreck and they're not
Yeah.
even a good how are they going to help me when they don't even know the way to success?
Oh gosh. At that same institution, a different frontline cashier, she had $7.35 left in her bank account after her paycheck. And she was like breaking down to me and like kind of letting it all out, saying,
Yeah.
I don't know what's going wrong. And then I was able to show her, here's where you're spending everything. Like the Starbucks was the worst one for her. So if you're looking for financial advice, right? I have a financial advisory company. I'm very aware of how these things work. So I'm very well versed on how to talk about this. If you have someone who's not good with their money, you're going to feel that because the bank is teaching these people, you want to look for this because then you could push them there, or you want to look for that and you could push them there. It's like that internal referral source, and they're doing that all wrong. That system's broken because the trust is gone. People
Mm.
don't want to go into banks and say, oh my gosh, I just want this one little thing, a beneficiary taken care of on my account. you should go talk to our private wealth manager, or you should go talk to our loan officer, and we could do all these things for you. I
Mm,
didn't ask for that. No one's saying, hey, Derik, I need this. I'm struggling with this. How could you help me? That's why people don't want to go into these banks anymore. It's like they're getting sold a bag of things that they don't need. Hey, why don't we
mm,
sign you up for another credit card so that you can get PVCs at Chase, right? All these things is super outdated. And that's why people are not going into institutions and the brick and mortars anymore. And they're going to these neobanks.
mm. Yeah,
Think about that.
yeah. I hadn't really thought about that. I mean, honestly, I think about it mostly from a tech perspective. Like, people are going to Chime instead of Chase
Mhm.
because of a better technology experience. But it sounds like there could be some cultural reasons for it as well. If people aren't, they're going to a credit union or a bank for help, and instead of getting the help they need, they're being sold to. So that's really interesting. I think it's really interesting that you're in these pilots. You're starting internally, like let's cleanse the inward vessel, and then
Yeah.
we can help our customers and our members to be better at this. And furthermore, it sounds like in the example they gave with the gentleman that was spending too much money on clothes and on eating out. And I don't spend a lot of money on clothes. In fact, my wife is like, "When's the last time you like bought a shirt for yourself?" And I'm like, "I don't know, high school." um,
Yeah.
but the eating out, I get that. I love food. I'm a foodie. If there's one thing I'm going to splurge on, it's going to be food.
Yeah.
But it sounds like the first thing that Diane Money does is essentially show people analytics, or like show them the truth about what they're spending money on. It helps them see differently, which is really the beginning of any sort of transformation. Is you have to see differently, you have to understand differently, you have to recognize some sort of truth, and then you can begin to change. I think that's true in all aspects of life, and so it sounds like that's the foundation.
It's definitely the foundation. When you are struggling financially, it's either going to be a spending problem or you're not making enough money problem, but it's primarily the spending. Like most people aren't broke. Most people have money hiding in plain sight that they're losing every month that they're just not aware of.
Mm,
The subscriptions are part of that, but it's primarily from what we've seen, it's the things that you don't necessarily need every month. It's the spending, it's the clothes, it's the shoes, it's the eating out, it's all these things. Because when you look at your spending and you have a tool to do that, and it's going to show you all your categories, you're going to see it in plain sight. Like, oh my gosh, I spent how much money last month? And
mm,
everybody needs that reality check, even if you do it
yeah.
once. It's just have a baseline. And then if you use our technology to show you 3 ways where you may be overspending, one of the things that we saw a lot of the times was car loans.
Say
Like
it
the amount
again.
of car, the one of the things that we've seen was car loans. The
Car
amount of car
loans.
loans have been
Yeah.
insane lately, but interest rates have been up for a while now. But you need to get that
Well, and people
baseline.
buying cars that they can't afford.
Very
Like
true.
yeah, sweet. You've got this awesome new car, and you're paying $700 a month.
Yeah.
you know,
And
or higher. So like it's great to have that nice new car. And but yeah, I think a huge problem is people buying things that they can't actually afford to pay for.
yeah, and your bankers are doing it, your credit union staff are doing it. And that's why we want to have the focal team who's going to be relaying this to your customers, have them really well trained on it, and you start with them. Because if you have a core group or one person in each branch, you're going to be able to create customized plans without having to do spreadsheets and all this other stuff for your banking customers. So when you show them, hey, Mr. and Mrs. Smith, why don't we use this new program? There's no cost to you. What we're going to do is show you where to save money every month. Are you interested in that? Of course. It's like, I would love to see where I could save money every month. And then when you see that extra, let's say $200 that you're spending at Starbucks as a theoretical, right? Then you could start automating that savings for them. You're sitting in front of them. You know what? I know that this is something that we're spending money on. I'm just picking on Starbucks just because it's simple.
Mm-hmm.
But why don't we automatically start saving that money for you every month? Let's automate the savings.
Yeah.
That's
Yeah,
how
that's
this
interesting.
works. This is how it works.
Excuse me. And one of the things in thinking about this, because I I I'm thinking about, okay, how do you take this concept, and if a credit union or bank, someone's listening to this and they say, yeah, this that makes sense. Help our members, help our customers to save more money. That increases our deposits. But then I'm thinking about it. I've been working with financial institutions on their websites for 11 years. So yesterday was the 11-year birthday of our
Hey,
company.
happy birthday
Uh,
anniversary. How incredible.
thanks. And over that 11 years, looking at, you know, hundreds and hundreds of different financial institutions' websites, and helping a lot of them with their websites. I I've got a pretty good take on what sort of information goes on these websites, and I can tell you that most of them are very product focused. Like, here's our product, here's what our product can do. And you can talk about that from a benefits perspective of, here's how you'll benefit from that product. But I I can't think, there probably are examples of this. I can't think of any off the top of my head, but imagine if, instead of saying, here are our savings products, like, here's our program for how we are going to help you save more money than you are today. You feel that distinction where it's
Oh,
like,
yeah.
you can sign up, hey, yeah, we've got share certificates of deposits. We've got savings accounts. We've got money market accounts. Here are the features of those. Here's how you'll benefit from those. But it would be a totally different angle to say, we have a savings program that you're going to be part of, where we're going to we're going to use these different products. We're going to help you to get better at saving money and to save more money. It just seems like, for and maybe that wouldn't appeal to everyone. If someone's already a good saver, maybe like, I don't need your help. But for those that are spenders, that maybe recognize they need to be better at saving money, but they need help knowing how to do that, and perhaps even accountability for
Right.
it. Just seems like that sort of angle could be a very powerful angle to take.
Oof. You would have a line out the door for people waiting to get help for this if you implemented that communication. That's the key. And it's not like people having a line to get to the ATM. It's like, I need help. If you really open yourself up to this, and when you do, because you're going to be able to do a couple things. When you use Diane Money, you're going to be able to find other deposits as well. Because the truth is, you're probably not the only one. I've seen this in institution that even in the banking world, most of the deposits in the savings accounts are held at credit unions just because they pay a point better. Your own employees are not keeping their own money at your bank.
Mm,
Okay?
mm. Yeah. So what you're saying is the idea that, and this is, I think, taken as common knowledge at this point, that consumers often have money at more than one institution. And so what you're saying is, if you can give them a means to optimize their saving, then whether you're a credit union or a bank, then you've got a higher chance they're going to bring over funds from elsewhere. And
Absolutely.
I can't help but think about how most credit unions and banks are commodities. They have all the same products, all the same services. They basically all look alike, except they have different names and different brands, and operate from different locations. But otherwise, they're basically interchangeable, and most of them are just competing on rates, which is a really difficult place to compete. And so I'm thinking about this. How could you take this concept of helping people to be better at saving, and it's going to be a win-win. It's going to help the member to put more savings in their accounts, but that also means more deposits for the financial institution. So yeah, I'm thinking about it from a differentiation perspective. So
Oh,
you
yeah.
can rather than just, even if it's the same products, like you have the same savings accounts, certificates, and so on, but when you can put that into wrap that up into a service that's different from what someone could get elsewhere, that could be a point of differentiation.
It makes all the difference in the world. When you go into the bank, I mean, think about your last banking experience, and everyone watching this show or listening to this. I mean, what value did you get? What was different from the last time? There's probably not much of anything. I'm sure there's places out there who are doing things differently, but your personal bankers don't have the time to create a spreadsheet to show someone where their money's going, and they're not going to see everything. That's where you have to utilize the technology to get you to this point and have a customized solution available for people. It's like having a cookie cutter investment approach. It doesn't work because your situation is going to be different from someone else's. You have to do things individually in order to have your customers to have a much better experience. And one of the bankers that we were working with at a different institution was completely in debt, had roughly $3,000 of like residual monthly payments coming in from a truck, a boat that never got used, right? Credit cards, all of these things. And this was their A plus employee,
Mm.
like the one who had all the sales awards, crushed it, got the bonuses, all the money was spent essentially. And when these things are happening internally, if they need to continue to sell things, right, to sustain their lifestyle, what kind of service do you think your people are really getting?
Yeah.
Probably not the best one, right? And I could feel
Yeah.
that. I was like, oof, this is a little off, a little off. And when I was speaking at a banking conference, a banking and credit union conference about a month ago, one of the gentlemen was up there. He got called up to stage, was talking about how they do their savings and really their loan process. And he put up this big complex chart. We have this person doing this and this person doing that. And then this person will call this lead, and they call them leads inside their own bank. They're trying to cross sell
Hmm.
because they're looking at it from This person has a loan that's maturing. Let's give them another loan. Because they're calling these people, let's do another loan. And it's more predatory a lot of times than helpful. So we're trying to solve for that. That's a hard one to do. But another instance that we really helped a group of people was the credit card debt. Banks love credit cards, right? They give them out a lot. But if you're talking about truly helping people, if you're able to see, and we show this as well, all the APRs, all the credit card debt will show you how long it's going to take you to get rid of your debt inside Diane Money. And if you take that extra $200 from Starbucks a month, going back to that example, and pay off your debt with that and automate that as well, you'll be debt free X amount of months faster and save $16,000 of interest if you just repurpose that $200. Now imagine if your personal banker did that for you and helped you get out of debt versus putting you into more debt.
Yeah. More
That's what
loyalty.
people want, of course. And then they're going to tell their neighbors, the community, they're going to tell their friends, they're going to want this. Hey, my personal banker showed me that I could save $5,000 worth of interest on my credit cards by doing really not much of anything. If you really think about it, just stop spending money here, or here's where you can save and implement that. It's a game changer. And this is the future of investing. It is the future of the credit union world, the banks. We need more customized solutions like this to help people get out of the situations, because then there will be more deposits.
Yeah. It's like you can, as a financial institution, on the one hand, you want people to get loans, but if you're giving people loans that they can't afford or putting them into a financial situation that makes them financially unhealthy, then ultimately you're not making a good long-term customer. Like
You said
it's
it best.
like
Yeah.
like the best path to having a great long-term member is to help them to be financially successful. And that's going to mean more deposits and, loans for things when they need it. Uh, but yeah, that's really interesting. And so I'm curious, Bill, with Diane Money, it seems like there have been other things like this that exist or that have been tried. Like I think of Mint, which I think isn't Mint gone?
They're gone. They've been gone
Yeah.
for, I don't know, maybe a couple years now.
Okay. Yeah. Like
Yeah.
so, Mint is gone. I think Money Desktop is another one that I I don't know, like really took off.
I'm
Um,
not sure about that one.
like I know some of our clients that have used it, but it's not ubiquitous. So what's different about Diane Money? Why would this solution work where others have not?
That's a great question. I don't know all the other products on the marketplace, but I will tell you it has to do with the board level and the CEO level of making changes. It's not even about the technology, it's about you actually having the audacity to do something different in your marketplace or in your community, because everything is quote unquote working until it's not. And I think people are waking up to this. I see it on LinkedIn all the time. Banks are shrinking. The community banks are gone. Why have they left? And these are all the reasons why. They're not having customized solutions for people. It's all cookie cutter. So Diane Money, when you go through the process, is you're going to see where you're spending your money. Every banking customer should know this. And Mint was great at that. I used it a long, long time ago, but if you don't know where your money is going, how are you going to save? How are you going to invest? How are you going to pay off your debt? So that's a great first step. But then if you have the ability at an institutional level to show people where they're overspending, but also to show them how to pay off their debt as quickly as possible, because there's debt elsewhere too, Derik. It's not even about just their place. They're going to have a credit card at maybe 3 or 4 or 5 other places. What if you consolidated those loans, put the debt on your books, and instead of paying 28%, you're paying 8 or 10, and you have a 4% spread on that, and you're making 4% where you didn't have that revenue before. You're going to find all these opportunities right in front of you because these people are coming to you for customized help. It's so simple, right? It's just literally, you're able to take care of your people first and foremost, but your institution, your revenue is going to grow from it as well.
So you said that what you said, I think, is interesting because when I was asking what's different about Diane Money versus Mint or Money Desktop, I was expecting a more, I don't know, technical sort of answer, or a like a more like specs type answer or an implementation type answer. But the answer you gave was really more of like adopting a philosophy into the culture of the institution. And am I hearing that correctly? It's more about, yeah.
Yeah, you're spot on. I mean, you can have all the great intentions in the world to help your people, but if you're not utilizing technology now to do that, you're just using up human capital. And that human capital is stressing out your employees and making them exhausted when you can sort of simplify this with technology now. And again, if you challenge any CEO or C suite or chief people officer at a bank or a marketing officer, what are you doing differently? Like the toaster, the free toaster, things are done. Those days are dead. You need to figure out how to truly impact your people and use technology to make that happen.
Yeah. So if you were to, so I get the technology aspect of it. I'm if you were to put into words like the philosophy, like what's the cultural shift that the institution needs to make in order, because it seems to me like the technology is actually secondary to what you're saying. Like you need the technology to operationalize it, but if you were to put it into words, the core philosophy that someone needs to
Yeah.
adopt into their culture to make this shift, what how would you explain that?
Yeah. There's a credit union here in Indiana, so not too far away from where I'm at in Chicago here. They wanted to have each of their 150,000 members have at least $400 in a savings account. That's a big, audacious goal. And that screams to me that they don't even have savings accounts set up, and the majority of their people don't even have savings. And that's insane to me. But when I did the math, that would be an extra $60 million of deposits. And I told their team, we could find that $400 for each person in 3 months or less just by using our technology. Like we can find that. You'll have to automate it, which is easy. That's just a few clicks of the buttons on your side of things, but you need to have the people at the top who are making the yes or no decisions to be open to change, right? And our other friend who we mentioned earlier, that's why he got burnt out in this industry, because it's very hard to change because you just want to stay doing the same thing. They think it's risky, and the risk is not to change.
What do
The
you
risk
feel like
gets to
that?
stay there.
What do you feel like that core change is that the
Mm.
institution needs to make?
Test it, do the pilot, see the implementation, see if it works for your people. Taking action is really the name of the game. And it doesn't have to be Diane Money. It could be something else that may fit your need, or a loan consolidation or something. I don't know, because I don't know each and every individual institution and what their goals are. But if you want more savings and more deposits, we could help figure that out, because you're going to find the money hiding in plain sight. And you just have to take the opportunities to do it. Reach out, do the work. That's when you're going to see that change. It's just like if you want to lose weight, well, you need to change your eating. You want to save money, you have to change your spending habits or learn to make more. And it's no different for these businesses. It's truly a business. If you want your business to change, you have to do something different.
I agree 100%. And yeah, I feel like it all, going back to where we began, it starts with being able to see something different. And if you have a clear view into what's, I'm talking about this like from a consumer perspective, uh, because, well, maybe funny example. I used to, we moved, my family moved about almost 3 years ago. And before we moved, we had a scale in our bathroom, and I would weigh myself every day. And so I always had a pulse on my weight, right? Then we moved, and ever since we moved, I like didn't know where the scale went. So I basically haven't weighed myself in 3 years. Um, I I uh, I I just had a health examination for some insurance policies that my wife and I are applying for. And uh, so the nurse coming to do the exam, she brought a scale, and I got on the scale, and I was like, oh, that's like the most I've ever weighed in my life.
Wow.
Which, I mean, I don't feel like I'm uh like I'm still at a healthy weight, like as far, but I was like that, yeah, and I didn't know because I haven't weighed myself in years. So
Wow.
it's funny. My wife, she was asking, "What do you want for Father's Day?" And I was like, "I want a scale."
That's a
and
great
so
gift.
and so she got me a scale, and I've started weighing myself again, because it's there. And the key point I'm making is that when you have that data available to clearly see, keep track of something, whether it's your weight or your spending habits, that awareness is essential for driving change. Because when I used to weigh myself every day and I noticed my weight going up, I would cut back on my eating a bit, or like, especially on treats and stuff. But when you don't have, when I haven't had that constant thing to look at, right? Like I don't know what my weight is, and it's the same with spending money, right?
Yep.
If you don't have some way of knowing what you're spending money on, and a clear picture of that, then it becomes very difficult to save. For me, the the total game changer for my family and also for our business, in 2020, we implemented envelope budgeting for
Oh,
personal
yes, yes.
finances and business finances. And that was a complete game changer, because it just meant setting up a set of accounts and saying, the money that goes here is spent on these things, and the money that goes here is spent on these things, and this money is going to savings, and that doesn't get touched. And that was a total game changer. And There are different philosophies that work for different people, but I think that's the essence of what I'm hearing about what you're doing with Diane Money, and I appreciate what you said, where whether someone's using Diane Money or some other solution, uh, I feel like the underlying takeaway is you have to have, I'm going to call it analytics, or you have to have insight into what's actually going on. You have to be able to see what's happening in order to make a change.
Absolutely. I mean, that's your baseline. It's your scale. It's your spending. It's whatever the case may be. And when you have even that data, it's like you actually still need to act. You
Right.
still need to take the action. And
Right.
that's where the magic's going to happen. That's where the behavior will change. And that's when you're going to realize, I really don't need this stuff. And it's beautiful to see the outcome on the other side of things, and your institutions will grow.
Yeah. Yeah. What's so interesting is I see the exact same corollary in, we've now talked about uh, like body weight. We've talked about it with money management. And I see the exact same thing with financial institutions and their websites, because for most of them, they don't have good analytics. They spend lots of money and lots of time building websites. They launch them, and then they don't have clear analytics on conversion. And so what happens is they don't really get anything out of their website. And if they do, they wouldn't know it. And
Wow.
so it's the same. I just find it interesting because that's, I mean, the reason we rebranded to the name Metrify about a year ago is because of, for years we've been putting this focus on metrics and on seeing what's actually happening, because then that enables you to test something, to do something different, to try and cause a change. And I I wasn't intending to talk about this at all. It just, as we were talking, it became so clear that there's this underlying principle of measurement, and and analytics that applies to like everything in life, right? It applies to, I know I'm talking about it now from a website conversion perspective and using that as a tool for growth, or we can talk about it with measuring weight and knowing when we need to cut back on our, splurging, or eating,
Yeah.
and knowing when we need to cut back on spending because we're spending too much on clothes or on eating out. And it just strikes me as a true principle in all aspects of life that if you want to see improvement in something, then having some way to measure that thing and see it and understand it clearly is essential for them being able to take action and measure the impact of that action.
Amen. Said that perfectly.
Cool. Well, this has been a fun conversation, and I appreciate you coming on the show, Bill.
Thank you for having me. It's been so much fun, and I'm excited to, share more stories as we keep moving forward and working with other institutions. So thank you so much.
Yeah, take care.
You too.